Hi, this is Roger Whitney with WWK Wealth Advisors. Over the last year or two, the economic news has been pretty dire. There have been lots of threats talked about for the economy, whether it's overspending and deficits or high unemployment or slow economic growth or the European crisis. There are a number of threats to the economy. Despite that, U.S. stock markets, represented by the S&P 500, have been setting new highs in the last month or so. So rather than add my voice to all the quote-unquote experts that are pontificating about where markets are going to go from here, what I want to do is take the time to counsel you to use this as an opportunity to reevaluate your investment portfolio and strategy to make sure it's appropriate for your situation. Most of us make financial decisions from an emotional state of mind, whether it's greed, wants, and desires, or fear in selling at the wrong time or selling when we're feeling stress or risk of loss. So this is a good time to reevaluate while some of those stressors aren't so high. There are 4 basic ways I would recommend that you evaluate your investment strategy to make sure it's right for you. First is time frame. Are your investment assets given enough time to perform? They should be long-term assets, meaning 3 years or more, to actually be able to perform for you. If you have an upcoming expense or expenditure that you know you're going to have to go to your financial or investment assets for, now with these markets might be a good time to go ahead and put that as cash so you can actually have truly long-term investments. Secondly, you want to make sure that your portfolio and strategy fit within your entire balance sheet or your net worth statement of your financial life. A lot of people don't think of investments that way, but really they're just a line item on your entire financial picture. Do you have enough cash reserves to give you the comfort level to be able to be flexible in how you make financial decisions? If not, or if you know you have upcoming expenses, now is a good time to make sure those cash reserves are at a proper amount. Secondly, do you have outstanding debt that's high interest or consumer debt that you've been meaning to get rid of? This might be an opportunity to evaluate doing so. And you can only do that from an investment standpoint by looking at your entire balance sheet. The third consideration you need to have is, are you properly diversified? And there's a lot of debate of how this goes. Generally, what we end up seeing is people that are much too hot. Either they have too much risk for what they're trying to accomplish personally, so they have a lot of volatility in their portfolio, or we see them much too cold, meaning that they're so fearful of all the economic news that we've been seeing that they don't have enough risk to give them a chance of achieving all the financial goals that they have as a family. So you want to be properly diversified, but you need to have it fit your particular situation. And fourthly, you want to make sure, and this is most important and probably the most difficult to do, is your financial strategy and investment strategy leading you towards the things that you care about most as a person or as a family? And that can be very hard. Return for return's sake doesn't really accomplish anything. The whole point of investing is to achieve something that you and your family care about. And you can only look at that from a total financial picture. If you go through the process of these 4 areas and make sure that you're covered there, you're going to go a long way to giving you financial flexibility and to deal with making sure you have a good portfolio and a good strategy for your situation while we're not under the stresses of market downturns or economic strife.